Folks, welcome to the weekly market recap. This week, I ended up on a negative 2 RR. Literally on Monday, it was a floating 9 RR reversal. Market reversed out of the 50% mark of the weekly, of the daily rejection block, which on that day, I wasn't really aware that it's supposed to go down because there was an SMT with the daily right over here. The Friday candle had SMT with a Thursday candle, and that right there showed a sign of a reversal. So the resistance block was gonna play a sign of a ERL, right? So we're going from a resistance block ERL back to IRL, and on Monday I didn't realize that, so that's why the floating 9 RR literally reversed on me and only made 2 RR, but eventually after that I lost another RR, which was on Wednesday, and eventually lost another hour on Friday, which both were mistakes which we can learn from. I don't really care about the loss or wins. It's chump change, you know what I'm saying? So all I care about right now is a system, trying to improve my shit. But what I've been finding out recently is market profiles are literally the missing things I've been missing recently, because for the past 3 months, I have been not using market profiles at all. I've been doing it, but mediocrely, right? Now didn't put too much attention to it, because looking back at it right now, this whole week, market profiles are nice right over here. After this candle close below this candle, eventually reach above the high, break below the low, reach above the high, break below the lows, right? Market profiles are big in play, and these market profiles gives you really good setup right over here on the Thursday setup. This low, this specific low, which was below the 0.50% mark of the OTE, was pretty nice to long it up. You can see, souped it out on the 5-minute time frame. There was a rejection block, long entry. Hit the right order block. Eventually, with the rejection block entry to long it up, for stop loss right below the low that that souped out the Ferrari or whatever. But we could put a stop loss couple of ticks below that low, and eventually target for a 5 or target the higher time frame, because that setup, was the setup I'm supposed to be looking for on Thursday. But on Thursday, I didn't have no setup here, because during that session, I didn't have no setup. But later on the day, I was looking at the market. I was like, this is a beautiful setup. I don't know why I'm not executing the setup, but looking back into it right now, this was a pretty good long, because time of the week, this was Thursday, and the weekly profile was a consolidation reversal, Thursday low of the week. So this setup right over here is going to perform very well, because market needs to go up, right, for the weekly closing price and closing at a fair price. So it needs to go back up higher. So longing that setup up was nice, because the reason why I didn't long it up was simply due to of the time. It was like, this is not during the session, but I forgot that, the higher time frame is in play. This is the, daily time, right? Because the daily time is Thursday, time of the week, which is Thursday, and the market goes at a fair price from Thursday to Friday. It needs to end up the weekly range gap, right? Weekly range, or what shit is called. It needs to close the weekly range, so it needs to go close up back up higher. So this setup did definitely make sense without waiting for the session time, right? But the daytime was definitely there. It was Thursday. The market needs to close back up higher. But we did have a setup on Thursday, which was a fairly swing long, which we took the wrong setup. We took the resistance block, but we're supposed to first take the fairly swing, which performed, give it a setup, hit a take profit, and eventually market reversed from there on forward after giving the market structure shift to the upside right over here. You see market shift happened to the upside, then eventually started dumping, because the majority are getting in from the market shift, from the breaker block, from the Ferrari gap, from the order block. So if that's happening, that's the majority. Market is highly likely gonna go soup it out, because that's the majority, right? Market likes to take out the majority and let few participants from. It will let few participants from participating from the move, right? It will let only few participate in the move, which was the failure swing. Eventually, once you make your RR, you get out. This is a model by itself, which is the model. This is from Romeo. This is one of the models where it's called, you get in before they do, you get out when the market does a break of structure, which is right over here, or you get out when they get in, right? When they get in is from the break of structure, from the breaker block, from the Ferrari gap, from the order block, etc., etc. And that was the setup on Wednesday and Monday. Market fully reversed. We did have a good setup, but that setup I shouldn't have been taking it because based on the OTE, right? It didn't really make sense to me because taking that setup, I was like, we're buying a little too high, isn't it? Doesn't really make sense. Although it did perform, but it fully reversed, right? We didn't make any money from that. We actually only made 1 RR from that because we had a floating 9 RR. After floating 9 RR, market fully reversed, made us only 2 RR instead of 9 RR. Eventually, the remaining positions that I had on that trade, which was a floating 9 RR, they reversed. So basically, I lost a whole RR on that as well. So I only made basically 1 RR in this trade because I had, 1.5 RR rigs per 1.5 RR rigs per trade on this trade right over here, which was a floating 9 RR eventually full reversed. And it didn't really make sense to me. I was like, I'm thinking of buying a little too high. It didn't make sense based on market profile. And market profiling, you want to buy, I'm saying, on a deep retracement or sell deep retracement, you want to buy on the low, sell on the high, right? And eventually, in this case, that really makes sense to me. So that's where the market fully reversed after tapping the resistance block in a daily time frame, which played a crucial role as a ERL. So it was a resistance block ERL back to IRL. As you guys know, whenever there's an SMT present, high likely that ERL is going to be the resistance block, because resistance blocks are a imbalance. It's going to go from a resistance block ERL back to IRL, being this daily fair value gap. And you can see that's what I did on Tuesday. Tuesday was a pretty good day. I was like, I should be trading on Tuesday, but it was a day before FOMC press conference, so I didn't take the trade. But if I were to take a trade on that day, it would have been a loss, but I would definitely had another setup right afterward. But if I were to be way more smarter, I would have shorted down this candle and put my stop loss right above this high. Of the hourly time frame, being it and making it a little less riskier, just based on the market profiling, right? We want to sell above the high, buy below the low. We want to sell the rejection. So the market, if the order flow is bearish, every high you want to sell, every low you want to buy. Right? If the order flow is bearish, you want to sell the highs, right? So this is the market returns to the high, you want to sell the high. Eventually, you're looking for a break below the low, which you did right over here. So that would have been a good trade to take the downside, but I don't trade the day before FOMC press conference just because of the time. I usually have setups the day before FOMC press conference and FOMC meeting minutes, and I get fried and I get fucked up a lot. So I don't try to trade the day before those days, and I will not trade the day before those specific days. Now, let's go over the whole weekly market recap. That was overall a little quick insight to the whole weekly market recap. And you can see even the Friday setup right over here didn't really make sense to me because we didn't have that deep of a retracement. Even to me that day, on this day, both days, I was confused. It's like, I'm buying a little too high. Shouldn't I wait for a little deeper retracement? Because I did have a setup on both days, and they both failed, right? You can see all the when a market reversed at a 9 RR, it still failed. That I didn't profit the 9 RR, right? It still failed. So I was like, man, I think I'm buying a little too high. I should be waiting for a deeper retracement, which occurred, and then eventually. Then it performed to the upside where the market went up and eventually closed down for the weekly closing. And that's the whole reason why I got fucked this whole week because, buying too high, selling too low. You want to buy deep retracement, sell deep retracement. And the thing I was missing was our time frame OTE as well as market profiling, right? Because on this day, as I already said before, this was a day where it should have been long game because time of the week, which is Thursday. Thursday made the low of the week, which means market needs to go to the fair price. So market needs to go back up even higher. As well as that, we had a false market shift to the downside. This is the candle. We had a false market shift. So there's going to be explosive price movement to the upside with the next couple of candles, which you can see explosive price movement to the upside all the way till Friday. But yeah, let's get straight into it. Starting from Monday, going all the way to Friday, talking about the lessons. And yeah, let's get straight into it. On Monday, we were looking for longs. Obviously, we had a daily SMT IRL to ERL, a daily CRT to the upside. The short term was bullish. We had to close above because high prices. We as well had that's all we had. The weekly time was overall bearish, but now going down to the lower time from the market concentrated to the upside, we had a near continuation we had a daily range, right? Discounted, you got technically range high. But one thing I said before, one thing I forgot about is that there was an SMT. There was an SMT with GU with this high, which that's why the market fully reversed, because this resistance block right over here played as a role as a ERL. So we go from a resistance block ERL back to IRL, which you can see ERL back to IRL. Eventually now could potentially go back up to ERL and do all that shit. But on Monday, I'm not going to talk about it fully because I should have not taken that trade, simply because I didn't have the OT retracement, because I could see on this day when I had the setup, I was supposed to buy around the 0.3% mark, nowhere near around here because I'm buying too high. As you guys know, the general thumb of trading is buy low, sell high, buy deep retracement, sell deep retracement, never buy high, never sell low. In this case, I'm buying high, so it should have not been a setup. And this setup right over here literally broke my rule of the OT in a new situation. In a new situation, there's an OTE. I can only buy between the 0.3% mark of the OT to 0.86 mark, right? I cannot buy anywhere else, which that broke my trading guideline rule, so I didn't even execute a trade. I should have not executed a trade. Although I made money, guess where the market go? The market took the profits back because that was not my setup I should be taking. So Monday, the lesson of Monday is simple, is that whenever there's SMT present, the resistance block usually plays a role as a ERL. Then eventually goes back to IRL, and once it goes, the only time the high plays as an ERL when there's a SMT present is when the resistance block gets disrespected, meaning if the market closes above the 50% resistance block. I've already said this to you guys on a Discord, sent a whole announcement about it. There's many ways to know if the market will go to the high or to the resistance block in reverse, right? So how do you know go to the high instead of the resistance block? Was if the market goes above the 50% mark of the resistance block, and it shows great signs of disrespect, and yeah, that's how you know a resistance block will get disrespected. There's many other ways to know it, but that's one of the primarily easy ways to know. But the lesson of Monday is whenever there's SMT present, the resistance block will play as a role as an ERL to IRL, and that's an advanced form of ERL to IRL, IRL to ERL, shit like that. Now, going over Tuesday, I did take a trade, although we have a good setup to the downside. Tuesday, the order flow changed to bearish. Now, I have changed my order flow typing because my short-term drone located on a daily time frame, and my short-term drone located can change bullish to bearish in and out multiple times. So, using time for alignment, we're going from a daily to hourly. So, hourly time frame is giving my order flow market profiling, where do I think market will be going based on the market order flow? Is the market resisting above the highs and breaking the lows, or the market breaking highs and resisting below the lows, right? That right there, how you probe order flow on the hourly time frame for me, because I'm a day trader. Hourly time frame is important, and as well, my short-term located is on the daily time frame, and my short-term located can change in and out multiple times. So that right there helps me a lot, because the daily time frame, I'm looking for key levels, I'm looking for IRL to ARL, CRT, all of that good shit, right? So that's the lesson of Tuesday. The reason I didn't execute was because it was the day before FOMC press conference / FOMC meeting minutes, so I don't execute the day before it, because there's a lot of things that's happening. Although there was a setup, but if you go to lower time frame to execute those setups, you would have been stopped out. You can see market stopped at a high, you give the order block, you get a resistance block entry, and you get stopped out from the news. So that's why it's important for you guys to not trade the day before FOMC press conference as FOMC meeting minutes, because that day, the day before, is when a lot of people are gambling. When there's a lot of interest, people are just put a long trade, short trade for the upcoming day, which is why we avoid that specific day. Now, that's on Tuesday. That's on Tuesday is to not trade the day before FOMC press conference and FOMC meeting minutes. To not to use hourly time frame to probe the market profiling, right? To do market profiling way more. It should be one of my highest priorities, because that right there helps me get the best total soups, helps me overall know where should I usually buy, right? Helps me buy buy low, sell high, sell helps me buy deep retracement, sell deep retracement, sell deep retracements, and as well it helps me with the OTEs, right? If you know, how do you know to sell on this specific high? It's based on, you know, OTE. We go to this right over here. How do you know to sell any candle above this high? OTE. How do you know to sell this candle and not this candle? Because this candle above this candle high, there is a order block, right? Order block, fair value gap, whatever there is. In this case, there was a propulsion block, which is the order block that filled another order block, that filled another order block. This order block filled souped out liquidity. This order block filled this order block, and this order block filled this order block, which to fill this order block, etc., right? So if you were smart on Tuesday, you would have shorted down this candle, put your stop loss right above this order block high and shorted it down, because it's right above this order block, right above this basket liquidity. If you're bearish, because the order flow changed to bearish because it tapped the high time key level, which is the resistance block. This is the last low, it tapped the high time key level, closed below it. Now the order flow is overall bearish in the hourly time frame, which is my main time frame to probing order flow, because I'm a day trader and the daily time frame changes a lot of the daily time frame is my shooting liquidity, which changes left and right, which from daily to hourly is the time frame alignment. So the hourly time frame is gonna be my time frame to probe for order flows. So how are you going to short down this order, this basket liquidity? Is because right above this basket liquidity there is a key level which will play a crucial role to shorting it down, right? Eventually this stop loss is very nice because there being a buy side liquidity or sell side liquidity right below it or above it, right? In this case, right below this order block that filled out another order block that filled liquidity, there is a buy side liquidity which will play a good role. They can shut it down, but I would have not taken these trades. I will probably take these trades in the future. As of right now, I would have probably not taken these trades because not at that advanced in the ladder. But this is how you usually do it, right? As you guys know, when there's a fair value gap, I'll show you guys on the Wednesday trade. Right over here, let me show you guys. Where was it? Where was the example? How come was this a good stop loss to put it in? Because this can right over here, it filled the fair value gap. So this stop loss will highly likely hold. Although you didn't hold, but you take profit got met already, which is the breakup structure, which is right around here. But what was I trying to say? The soup of the liquidity. Let me show you guys the good example, which was on Friday. Was it on Friday? Alright, it was on Friday. So right over here, where are you shutting down this candle? Right below the sell side liquidity, there is an fair value gap, right? There's a key level. So this overall did hold and go up higher. How do you know where to buy on this key level? Just scale down to a lower time frame. Look for your shit in a lower time frame. Look for your pattern in a lower time frame to take it to the upside. But I'm saying you play the same role. There's a sell side liquidity, and right below the sell side liquidity is a key level, which is the fair value gap. There's a buy side liquidity right above the buy side liquidity is a key level, which is the order block, which that makes it a little higher probability of a total soup, right? Now, going over to Wednesday, I was overall bullish. The reason I was bullish on Wednesday was simple because of the daily IRL, which is the Wednesday candle. Because of the daily IRL to ERL, a daily shift upside, we're buying below the weekly opening price as well. We can have a potential midweek reversal. Although the midweek reversal didn't hold, but that was the anticipation. We anticipated a potential midweek reversal. It did prove us wrong, but on the Thursday, when we said consolidation reversal, it proved us right. So that's what we gotta anticipate a lot to be better. Now on daily time frame, we overall had a very nice bullish drawn liquidity. Now going on to a lower time frame on Wednesday, we had a daily right over here. We had a daily. You go down to a lower time frame. New York situation. If I'm bullish, I want the A that session to make the low of the day, which it did. As well, we have once again daily range when discounts we want to buy up. As we tap discount during HI, we have overall on this day we had a bearish order flow because market hasn't closed above the high that tapped the higher relatively key level. So the order flow is relatively still bearish, but there was enough market context to long it up. As all we had a 4-hour CRT on this day. Right over here, that 1 a.m. candle. Now going down to a lower time frame for the execution, which was a daily swing with Euro USD. We purged out the low of the candle, which when we purged out the CRT low, there wasn't a valid low at the CRT low, so I was looking for this Lotegi soup, make a valid low, which it did. Eventually looking for the valid Lotegi soup at the right time, which it did. Eventually, after that, what we're looking for is either a rejection block long, which was the one we took, which was the one that went to a loss. And we had, or we take that, or we take a Philly swing. At first, the market order offered us that Philly swing long, which was which should have been the one to enter the trade in, because it was a Philly swing. And as you guys know, Philly swing is a form of total soup. One pair takes up liquidity, other pair doesn't. And the reason why I took the rejection block without the Philly swing is because during this time I was looking for the Philly swing long, but I was like, this is not in my trading guideline rules, so I'm not gonna take it. Then eventually I proceeded to take the rejection block long because of my trading guideline rules, and that went to a loss. But on this day, I changed my type of entries to two types of entries, which is one is rejection block, which is a form of total soup, as well as a Philly swing, right? When one pair takes out the liquidity, while the other one does not take out liquidity. In this case, one pair took out the liquidity, while the other one did take out liquidity, making a Philly swing. And eventually I was looking for a long the 1 minute time frame, going from 15-minute time frame to 1 minute time frame to execute the long. But keep in mind, this is a setup that we did not take, but during this time, I did, how can I say this? I did look into taking a trade, but I was like, I'm not going to take it simply because it didn't follow my trading guide rules. But I'm still going to journal this freaking trade because it's in my system now, right? As you guys know, you journal the miss trade, the win trade, the loss trade, you journal everything. And my stop loss was right below this candle low. Why this specifically candle? But this candle was the one that put the Fibonacci gap. So this low is highly likely to hold very well. And we need to cover spread, so we need to have a little wider stop loss. Especially my freaking live broker. You need that shit. So on low time frame, we had the SMT with this candle, which was not that candle, with this candle right over here. So this is the candle. So for the 1 minute time frame entry, this is what we're looking for. We're looking for a aggressiveness to our point of interest, which could be SMT or a soup. Then we're looking for a 4 candle consolidation. As you guys know, the more the market consolidates, the better, because the overall will lead to a big expansion, and it's overall better because it offers interest to both sides of the market. Because people want to wait till this highly gets soup to sell it off, and people are waiting for this. This right here is that, what is it called? A bear flag. People are waiting for this candle to go lower after consolidation, which when the consolidation happens, all we wait is for is a total soup and long it up, right? So we had the first step, which is our aggressive to the key level, which is this big bearish candle. Second step, to have consolidation, which we consolidated 1, 2, 3, 4, and it could be more than 4. It could be, but it has to be 4 and above, because 4 and above are enough range, right, for a range to even happen. So right over here, 1, 2, 3, 4. Eventually, once we have that step, the last step is to look for a total soup, right? We're either looking for a resistance block if the wick is really big, or we're looking for a liquidity sweep of a 1 minute low or 1 minute high. In this case, these two lows are relatively close to each other, so I would just take this low because this low going to get stepped out as well. Although you're probably wondering, well, if this low gets stepped out, what about the SMT? We had SMT with a correlated pair, but we started after we first had SMT with a correlated pair. After that, during the SMT, we're respecting the steps of our entry in the 1 minute time frame, which is first aggressive into our point of interest, then consolidation. First market aggressively, push down to do SMT. Second, it consolidated, which followed up step. Third, we're looking for a entry, which is going to be a soup of a high or or low, then long it up, because as you guys know, we're going to buy, sell stops, we're going to sell, buy stops, right? Simple as that. Now, waiting for a soda soup, long it up, two stop loss right below here just to cover spread, because my broker, how should I say this? The broker spread are 1.8 pips, which is a lot. So I need to have a wider stop loss. And if you're in the right side of the market, you want to increase your stop loss because, you know what I'm saying, you want to cover the spread. And if you're in the right side of the market, you're regardless going to make money. So you need to have that extra cushion. Market eventually went up, hitting a 5 RR because the favorite swing trade is a total soup trade, which is usually always offer a 5 RR. Eventually, market reversed after the market structure shift, because right over here is the market structure shift on the 15-minute time frame. So over here is when the majority are getting in, but before they get in, you get out. You get in when they get in, right? So you could have exited right around here on the market shift, or you could have just gone for a fixed 5 RR, because this setup right over here went against the high temperature look, was overall bearish. So I just went for a fixed RR, but you could have definitely targeted over here. So this is a model by itself. This was given to Romeo, and this is by Romeo in 2023. This is the model he's called. I don't know what the fuck he calls it, but it's a good model though. Back to steady is very nice. It's the model where you get in before they get in and you get out when they get in, right? So when they get in is the market shift. So majority are waiting for a market shift, and that's when you get out, right? Simple as that. That's a model by itself, which he said it, which I stated, and he said it multiple times. But yeah, now that's the lesson of Thursday. The lesson of Wednesday. The lesson of Wednesday is one is whichever model offers us the first entry, we're gonna go with that model, right? If we have a Philly swing entry first, we're not gonna enter the resistance block, right? If we get the resistance block entry, first, we're not going to enter on the Philly swing. So once we get one of them, we cannot take the other one, right? So once we get a setup and that's our place take profit, we cannot take the other setup because other setup would fail, right? You can see I waited for resistance block to retrace all the way back down. I took a long and it overall hit my stop loss instantly, which is a great thing. If you're trading total soups, this is why I like to trade total soups, because of the stop losses, right? You can get stopped out quick, which is very nice. I don't want to be in a trade. I don't want to be in a losing trade for over in a day. Because when I used to trade, I used to have a loss, but that loss took a whole day to hit stop loss because the stop was kind of wide. And during that time, going to my stop loss, I had a lot of psychology problems, right? Which that erupted a lot of psychology emotions. Which if you're trading total soup, if you're wrong, you get stopped out very quick. You get stopped out in less than 10 minutes, right? If you're right, you just you make money, you're cool. Because if you're winning, why do you wanna get out early, right? Simple as that. Because when I took the resistance block entry, I didn't feel no emotion because my stop loss got hit very quick. It got bad really quick. All right, so that's the lesson of Wednesday is I can only trade Philly swings with an SMT present, because SMT gives a sign that okay, this is the potential high and this is the potential bottom of the move. And if there's no SMT, how do you know this is the high or the low? How do you know this is the bottom or the top of the move? So it's kind of confusing. So what you want to do is you want to wait for that SMT to form with a correlated asset, and that helps you tell, because SMT is a way how the market maker tell you, okay, this is the potential top and potential bottom. So we always need to wait for SMT, and we need to have the other steps there as well, because if we don't have that, it's gonna fail. Alright, going over to Thursday, and the next lesson of Wednesday is if we get Philly swing entry first, we cannot enter resistance block at all. If we get a resistance block entry first, we cannot get a Philly swing trades at all, right? So we can only take one, and with that one hit take profit, we're done for the day. No more than that. But on Thursday, this is why I tell you guys to everything must align, because on Thursday we had going to lower time frame. We had a setup right around which candle we had a setup with? I had a setup with one specific candle. Which one was it? Let me think. 1 second. I had SMT. This candle right over here, we had SMT with, right? Yeah, at a lower time frame, there's SMT. So go to the 1 minute time frame. Where is it at? Around somewhere here. So you can see we had SMT aggressive. You can see how this candle out of nowhere aggressively had an SMT, which is step 1 got met, which is why aggressive 2-hour kilo, which is the SMT, or you can go soup it out, but we must always have SMT present with one of the quality asset. Step 1 is there, but step 2 wasn't there because the step 2 was to have a consideration. But at least 4 candles have only had 3 consecutive candle losses. Eventually, right after that happened, and when we're looking for a consolidation, we want to look for around here to consolidate, not around below it, right? So eventually, once the market went lower, he disrespected SMT. There was no SMT present, and eventually there was no setup. But on Thursday, our setup should have been this long using the market profile and market order flow, which is the same thing. They're, this different name, branding, right? That's all it is. So on Thursday, our setup should have been on this day. Right? Our setup should have been on around 12 p.m. So on Thursday, we overall had the same buys as the day before. Now we had a consolidation reversal, and we need to close at a fair price with a weekly range. Right, market to close at a fair price. So market to go back up higher to close at a fair price, and we had a consolidation reversal. That means market to go back up higher. Since if Thursday make the low of the week, market would usually go and close for the weekly. You need to close the weekly range gap as well as you need to close when he needs to close. You're gonna close very hard, and the setup on Thursday should have been here because I never had a setup on Thursday, but the setup should have been this right over here because I would know time frame didn't have a setup on this specific trade. On this day right over here, what happened was you could see we had a near continuation, London session with the low of the day. We had a deep OTE all down to the 0.79% mark. And eventually that right there was a very good trade to take to long. Now, why this specific low and not this hourly low? Because this hourly low was above the 0.50% mark of this OTE. So the only time we're looking for the reason we didn't pick this candle low and we picked this candle low was because this candle was not in the 0.50 to 0.86 mark of the OTE, which this one candle was. So this candle is going to be a pick. Now going down to lower time frame to execute this trade, which we had a soup, we had a valid low, as well as we had the right number 1. And we're taking a rejection block long. That's the only thing we take. And our stop loss is right below this low. Couple ticks below it just to cover spread. So a whole pip below it. So I put 3 pips right over here. Eventually long it up for the higher time frame because since the market's supposed to the fair price to go very higher. What we could do is we could target the previous day high, which is right over here. The hours vary. Obviously the hours a lot. This is that's the goal overall on the longer term basis, right? So our target is the previous day high because market goes at a fair price, and the market usually will go back to the previous day high since it needs to go at a fair price. Right over there is the target, and that would have been a 24-hour gain, and that would have been a setup of Thursday. That setup right over here. Even on this setup, I was in the market. I was just watching the market. I was like, this looks like the move to take, and I said I'm not gonna take it first because of my rule. Second, I thought the time wasn't there, but time was there. It was Thursday, time of the week, and the day of the week, and it was a consolidation reversal, and the market needs to close at a fair price, so market needs to go back up higher, which that's the reason why this setup would have been valid to take, simply because of that factor, the time factor, right? So the time factor was actually there, which I thought it wasn't there. And that's the whole reason why, you know, should have taken it straight. And the order flow was a big play here. The order flow was a big play because this is the last high candle that tapped the high time and key level. Eventually, once we get closer above this high, we overall have a bullish order flow on forward. So we're looking for a symbol below the low, break above the high, as well as we had a false market structure shift right over here, false structure shift right down here to the downside. How come it's just a false market structure shift to the downside? Was because this candle never tapped the higher time and key level, so it's a false market structure shift to the downside, and eventually a very good turn soup will occur at a false market shift and a false breaker, and the breaker was this candle as well. This is the low that tapped the soup of the high, so as well the breaker was valid there, so you could have taken both. You know, both of the roles were played in this trade. That's what made it very high, probably set up to the upside. And you can see market did not fuck around and it instantly exploded. As you guys know, when a market falls, when the false market shift happens, market will tend to explode. And you can see right over here, it did. Now on Friday, we should have not taken a trade. We did have a setup. The Friday lesson is very simple. It's the same thing on Thursday, right? On the whole after Tuesday, the whole week goes bullish because the setup is only giving you bullish setups here. But on Friday, we just had a week below higher prices. We need to close in a fair price, so market needs to go up higher, and it needs to close back down a little lower to close in this shape because this candle right over here is one out of the 6 types of how a candle tends to close, which this is the constellation candle. And we also had a constellation reversal, so you want to close up higher because if it's a constellation reversal, Friday will be a classic candle to the upside. Going down to lower time frame, we had no OTE, but we had no OTE in a day, in that specific day. We didn't have OTE, but with the London session, which got invalidated, right? Which we took a loss, but we should have not taken it straight at all using market profiles and OTE. Through market profiles, as you guys know, we're probing through the hourly time frame. This is the low, this is the high. So we want to, since we're rejecting below the lows and we're breaking above the highs, the rejecting below the lows, the one we're looking for is the ones that are in the 0.50 to 0.86% mark of the OTE. That basically the deep retracement. That's the only time I'm looking for a long. And when I took that long, it followed every rule. It followed every single rule I had. It followed literally everything. Going down to lower time frame. It followed everything with the right amount of one. We should have had taken an entry right over here. Well, actually, overall, we should have taken an entry right on this trade right over here because this should have been the one to take that setup to the lump side, because that would have offered us already a big bump. We could have gotten out easily. And yeah, we followed every single rule, but it went to a loss simply because of OTE and the market profiling. Because market profiling said, do not long any of these because there is an OTE present. And OTE, if OTE is present, you want to buy around this low to long it up, which the market never retraced. Probably did retrace the quality asset. It did retrace the quality asset. You can see market pressed out the low while EU did it. So taking this long with the SMT would have made much more sense than taking this long, because what we're doing over here, we're buying too high. General thumb is, one more time, is to buy low, sell high, buy deep retracement, sell deep retracement. We're not buying a deep retracement. There's not a deep one of retracement. A deep retracement is when the market has OTE and it tapped to 0.50% of the OTE to 0.86% of the OTE, and that's the time. Oh, that's the only time you should have bought, right? But yeah, that's the lesson of Friday. There's multiple lessons on Friday. Lesson on Friday is first to prioritize market profiling. My biggest prioritize on the technical ways should be the market profiling as well as OTE not just that specific day OTE, the overall and general OTE. I should always buy deep retracement, sell deep retracement. I should always buy low, sell high, never buy high, never sell low. And the next lesson is to have free will, be smarter, don't be glued to this, don't be glued to the pattern. Think logically and be smarter. And the next thing for the execution is, first I should have executed on this resistance block. Only went to a loss, but first I should have executed on this resistance block and not this one because they're relatively close. So this resistance block didn't get tapped. And the next lesson is that I should have overall entered on this one because they're relatively near each other. And then get my stop loss a little higher. Go for a 5RR right over here. So all of this will go to the loss, but just the longer term basis, right? I should have entered this because the market, since there's a failure swing with the 4 CRT, I could have entered here because the market is on the resistance block. And the resistance block is a form of turtle soup, so I could have longed this turtle soup and gone for a 5RR instead of waiting for the confirmation and waiting for the other resistance block to occur. Because sometimes what the market does, well, the market will give it an SMT or the forward CRT or out CRT. You will tap the resistance block, which is a form of turtle soup, and it will just expand to the higher type of general liquidity without market giving us the market one confirmation. It will give the market confirmation, but without the market retracing back down to the resistance block that had the SMT with. So eventually market will expand. So market SMT, what the market will tend to do when the market does have a SMT, right? So market will have SMT right over here. Market will tap the resistance block, go up higher without retracing back down to this candle's resistance block and going back up higher. Market will just go retrace a little bit lower, tap the order block, break up block, and eventually just go up higher without come back down all the way down to this resistance block candle, which had SMT with this other, range. Which, how do we avoid this? How can we potentially capitalize on this trade? Is by when we had SMT with this candle, we should enter right on the resistance block of this candle that we're having an SMT with. And because resistance blocks are a form of a turtle soup, and you could have long it up, short it down, etc., etc. But yeah, this is the weekly market recap. Very big lesson. We only lost negative 2RR. Beautiful risk management. Risk management was on point. Very nice risk management. But yeah, this is my weekly market recap. Thank you for watching. Make sure to like, comment, share. Show in the description down below, and I'll see you guys later. Peace out. Beautiful week. Now my main focus to focus more on the market profiles, order flow, and OTE. Not just on that specific day, but overall on the whole general. But yeah, thank you for watching. Make sure you guys like, comment, share, join the channel below, and I'll see you guys later. Peace out.